Hello and welcome to Your Stocks live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra and this is the show where we answer all your stock queries from a technical and a fundamental angle. Before we welcome our guests on the show, let's quickly take a look at the markets because markets have turned or taken a turn for the worse. Nifty is at the day's low. The mid-cap index too has come off sharply from the highs of the day. And if we look at the advance decline ratio, after being in favor of advances for quite a bit, finally there are more declining stocks versus advancing stocks. So the advance decline ratio will show how it has been very volatile since the time we have started the trading session. Metals continues to be the top sector in focus. That index is up 2.5%. While we do see some losses coming in from Nifty Realty and Nifty IT. So the IT pack continues to be on our radar. Infosys also reports numbers today. So a lot of commentary from there is something that the street will be watching out for very closely. But let's get to your individual queries. So thank you so much for writing to us. To answer them, we are now joined by Sneha Poddar, VP Research Wealth Management at Motilal Oswal Financial Services. She'll be joining us in just a bit. And Somil Mehta, Head of Alternate Research, Capital Market Strategy at Mirae Asset Sharekhan, will be here to answer the queries from the technical lens. Somil, thank you so much for joining in today. And without wasting any time, let's start with the first query that we have. Rajiv is writing to us from Pune. He wants to know the near-term perspective on Alkyl Amines, PCBL and Rupa Industries. It seems that he is not bought into these names, Somil, but wants to understand whether he should be buying them for a short term or should let it go for now, considering the market volatility, especially on chemical names like Alkyl Amines and PCBL, because there's an indication maybe there could be a recovery from a fundamental viewpoint. But what are you making of these three names?
Yeah, at this point of time, if I look at Alchem Mines, it has a very crucial support around these levels, around 1500 levels, 1470 levels. So that zone is very, very crucial now. In the very short term, it has closed about the 20 daily moving average, good support around these levels. And I think it would, in the very short term, it would bounce till 1800 levels. So that would be my target in the very short term. But I would not suggest this in the medium term outlook, because in the medium term outlook, we have seen very sharp corrections. It is still in the lower top, lower bottom formation in the higher time frame. So in the medium term outlook, I'll stay away from the stock. But in the short term, yes, I think there is a spark and the stock can go up till 1800 levels. Now, the other stock which we have, PCBL, absolutely exit or stay away from the stock. Lower top, lower bottom formation, negative view on the stock. Every time frame and every crucial supports have broken on the downside. So stay away from the stock.
Okay, and what about Rupa Industries? I know the textile industry is generally in focus for different reasons, but technically, what's your take, Somil?
Which stock was that?
That's Rupa Industries.
Rupa Industries, again, same thing, a low top, low bottom formation, very crucial levels broken on the downside. The previous swing low on the quarterly charts, that was 175, that has also broken on the downside. So the next level as a target on the downside would be 150, and if it does not sustain above 150, then 137 would be my target. So stay away from the stock. View is negative in the medium term, in the short term both.
Oh, okay. Both for Rupa Industries and PCBL. Stay away from these names from a technical viewpoint in the medium term. Sneha, thank you so much for joining in. And, we are at a time when markets are seeing further lows. So people might be looking for opportunities where they can invest for long term, right? So Alkyl Amines, PCBL, some of these chemical names which are a query which is coming in for the viewer. And Rupa Industries as well. Different segments, but there's a possibility of recovery in chemicals. And for Rupa Industries, the entire tariff saga which is going on, do you think that would impact that stock?
Hi, good afternoon, Sonal. So in all the three counters, I mean, my suggestion would be to still stay away. Actually, if you look at alkyl amines or PCBL, the overall chemical industry is not doing really great. And it's been almost 2 to 3 years since the industry has been struggling, and still there are no signs as such of the swift recovery that we can expect. I mean, the growth is quite moderate, and even the export opportunity per se doesn't look like very promising. Though the overall revenue growth is moderate in these cases, but then the margin pressure can continue to linger on. So my view would be to avoid these unless and until if the investor is ready to hold on from a very long term perspective, but otherwise from the medium term perspective, one should actually avoid these counters. Even in case of Rupa Industries, its move will largely be dependent on the India-US trade deal, and there's a lot of uncertainty with regards to it. And if you look at its overall numbers, also the numbers are not very steady kind of numbers. There's a lot of volatility, and though the revenue growth seems to be quite decent, but then the margins, the cash flows are very weak for the company. So fundamentally, not a strong counter. So I would suggest to avoid all the three companies.
Okay, avoid all three of them, even from a fundamental lens. Thank you for explaining that very well. Let's go across to the next query. We are getting it from Balakrishna Hegde, writing to us from Udupi. He holds 9,800 shares of Yes Bank at 19 rupees. He's a long-term investor and wants to know if he can hold it for further 2 years or sell at current levels. He's making a profit of around 38,000 on this one. Decent quantity at 19 rupees a share. Sneha, let me come to you. Do you think Yes Bank is a name from the banking space where Balakrishna should continue the investment or should scout for other names in the space?
So, Sonal, we do not cover this counter, but then, whatever, the recent news flows has been, the company has gotten a good investor. So, definitely, a turnaround can be expected for the bank. But then, having said that, the turnaround normally takes at least 2 to 3 years to start showing the result. Overall, pose the issues that the Yes Bank has faced over the last few quarters, the numbers have started improving gradually. Though the improvement is not too substantial, but then the gradual improvement can be seen in the numbers. So the hopes can be kept that with the new investor coming in, the further improvement is on the cards. So probably the partial profit booking can be done, and the balance can be held on from the long term perspective, because here it would be a high risk high reward kind of a game. But then definitely one can at least expect with the good investor coming in that the turnaround can take place for the bank.
All right. So you are positive on the name, but of course, since you don't cover it, we are looking at it from that lens that yes, the new investor that has come in could change things for the bank. Somil, from a technical viewpoint?
Absolutely positive on Yes Bank for a longer term perspective, not in the short term, not in the medium term. But yes, long term, I think Yes Bank or some of the other private sector banks like IDFC First Bank, the great, amazing to be in this stock. If you have that in your portfolio, I think in the very long term, the prospects are really good. My targets for Yes Bank would be above 27, in fact even 32, 33 levels would be possible in Yes Bank. But these are all long-term picks, not in the very short term. I would not suggest anyone to trade in the very short term. For Yes Bank, it has trading about 200 daily moving average, trading above 20-40 daily moving average. So great setup. And a good entry time for long-term investors.
Okay, take that point, Somil, on this one. That's Yes Bank, but a lot of interest in the banking space. Harsh Kumar is writing to us from New Delhi, holds 65 shares of ICICI Bank at 202 rupees a share. He's a long-term investor and wants to know if he should book his profits or hold at current levels. Since it's a long-term question, Sneha, let me come to you. We keep talking about these big names, ICICI Bank, HDFC Bank. At any point in time, we keep comparing these two with the other big names as well. But if you look at this stock right now, do you advise Harsh to hold it or sell it and buy something else in the space?
I would advise to hold on to this stock. ICICI Bank is it's a long-term compounder, and this is one stock which should be there in everyone's portfolio. If you if we look at its numbers quarter after quarter, the bank has been able to deliver very consistent numbers and strong numbers despite the sectoral challenges which were there, and the other banks were struggling. But ICICI Bank was the one which delivered a surprise quarter after quarter. And even for the Q3, we are expecting that steadiness to continue with slight improvement in margins. The only key monitorable here would be the MD and the CEO extension. So that will be one space to watch out for. But otherwise, I don't really see any red flags as to why one should take an exit at this point in time. If it's purely from the long term point of view, then one should hold on and actually reap the benefit of compounding in this stock.
Okay, take that point, and congratulations to Harsh as well. He's made a decent money on this one. Patience helped, so as Sneha pointed out, that should continue to be the long-term bet as well. Somil, from a technical perspective, what's your take on ICICI Bank?
Yeah, ICICI Bank definitely on the large cap private banking, as we spoke about Yes Bank and IDFC First Bank in the private sector, smaller banks. Now, these are the large cap banks, and I'm absolutely positive on these stocks in the longer term outlook. In the short term, yes, we can see corrections, we can see sideways, time wise correction as well. But in the longer time time frame, you should definitely have these stocks in at least ICICI Bank in your portfolio, because from here the correction or the sideways time-wise correction which we're seeing in the last couple of weeks between 1400 1300 levels, I think the stock can rise till 1600 1700 levels in the next coming probably 1 or 2 years. So very positive on ICICI Bank, should always be in your portfolio.
Okay, take that point. I would request both of you to wait for a bit. We have to get into a quick commercial break. And as we do that, here's a quick note for our viewers. Get ready for CNBC TV18's all-new lineup in this new year. Incisive analysis, sharp commentary with CNBC TV18's brand new offerings. Watch our segment Cut the BS with Mangalam and Sonal Bhutra. Watch Macro Signal with Ritu Singh that isolates the macro forces that actually matter for the day. And finally, stay ahead of the curve with CNBC TV18's most trusted in-house technical experts. Welcome back. You're still tuned into Your Stocks on CNBC TV18. We still have with us Sneha Poddar of Motilal Oswal Financial Services and Somil Mehta of Mirae Asset Sharekhan to answer all your stock queries. Let's quickly get to the first one after this break. Vibin is writing to us from Bengaluru, holds 1,000 shares of Heidelberg Cement at 200 rupees a share. Wants to know if he should continue to hold or sell at current levels. Somil, let me come to you for a technical check on this one. And Sneha, then let me come to you because cement could be the focus sector for 2026. I would like to know your views on that as well. But Somil?
So this stock is basically forming low top, low bottom. A view is negative at this point of time. A trend is negative. A weekly, monthly, quarterly, all the time frames have low top, low bottom formation. It's struggling to go about 20, 40, 200 daily moving average. So now the next level to watch out on the downside is 153. I'm not positive on the stock, and I think the next target on the downside would be 150. So my suggestion would be to stay away, probably exit as well.
Okay, all right. Stay away or probably exit if you're holding the name. What about you, Sneha? Do you think Heidelberg from a long-term perspective would do well? Or maybe could cement be the sector for 2026 as well?
So no, we don't cover Heidelberg, but for the cement sector, at least the demand has started recovering a little, and though the prices are a little weak, but then in the Jan month, some price hikes were taken, and overall, with the capex gradually picking up both on the government and the private sector side, so the cement demand will eventually bounce back. So with that perspective, cement sector could perform. It really depends upon how the the budget allocation comes towards the overall capex spending. So that would be one of the important events to watch out for the cement sector. In this sector, what we really like is Ultratech Cement among the large space, and among the mid caps, we would prefer JK Cement for their overall the balance sheet strength, their overall capacity expansions plan that they have, and the profitability strength that they have showcased over the past years. So we are bullish on these two counters from this sector.
Okay, all right. So these two names should be on your radar. Let's go across to the next query. Anjali Sharma is writing to us from Noida. Wants to know if this is the right time to buy Lemon Tree Hotels in ITC. These two stocks have been buzzing on the back of news updates. ITC saw that 52-week level on the back of that excise duty. Lemon Tree, because of that big deal, Warburg Pink is buying some stake. Sneha, your take on both these names? Fundamentally, are these looking good at these levels, or if somebody is holding, should they add more add more quantity to their portfolio?
So, Lemon Tree, we are quite positive, especially post the private equity player, Warburg Pincus coming in. So, obviously, this will restructure the entire business and make the company asset light. So, we believe that this transaction will unlock shareholder value, and it will, it will split the Lemon Tree into the asset light management, and it will make it more as a brand platform. The Fluor business will be actually separated and would be scaled up. So the value unlocking will take place, but in order to all this to materialize in a meaningful way will take at least 1 to 2 years time frame. So one has to hold it in the portfolio from the long-term perspective. And moreover, the travel industry is seeing structural changes. I mean, the last 5 years, the demand has been very strong, and it still continues to be pretty robust, with the occupancy rates continuing to hover at the previous levels. So there's no sign of weakness in the overall demand. Thus, Lemon Tree can be added at these levels. The valuations are pretty attractive. In case of ITC, I would not really recommend because post the substantial excise hike, the company has taken some sort of price hikes, but then the price hikes which is required is in the range of 25 to 30%, and that will take time for the company to take such a big hike in their overall cigarette business. So there will be a lot of pressure in the medium term. My suggestion would be to wait for some time, and we might get this company at even further lower levels. So let's wait and watch, and probably 1 or 2 quarters down the line, one can further relook at it and then make an entry into the account.
Take that point. What about you, Somil?
See, I would agree. ITC would not be in my radar. It's been not performing. It's been struggling below 20-40 daily moving average, below all the averages, even the weekly averages. So yes, low top, low bottom on all the time frames. So I'll avoid ITC hotels. However, Lemon Tree, I'm positive on this stock. However, in the very short term, I'll be expecting a downside target of 140, probably 137 as well.
Somil, sorry, I'm interrupting. It's ITC, not ITC hotels, not the demerged arm.
Okay. All right. So let me complete Lemon Tree.
Yeah.
Lemon Tree, positive in the long term, and absolutely a buy around 140, 137 levels where the quarterly swing lows are. So absolutely positive on Lemon Tree, but the buying price would be around 135, 137 levels, which is the quarterly swing low. Now, ITC, if we go to ITC has had a very sharp correction in the very recent times, and the next level, it's a falling knife at this point of time, and the next level on the downside is around 300 levels, and I'll be expecting ITC to fall till 300 levels, and that would probably the right time to buy the stock. But I would wait for a reversal sign or a basing out pattern or something like that on ITC. So revisit around 300 levels.
Okay, take that point. ITC has been the hot topic for a while now. So has been Lemon Tree. So thank you so much for giving us your advice on both these names from a fundamental and technical viewpoint. And thank you for joining us today with your advice on different viewer queries that came by on the show today. With that, we'll take your leave on this edition of Your Stocks with the news that Nifty continues to be at the day's low and the advanced decline ratio in the favor of declines. The mid-cap index also has come off sharply from the day's high. While we take your leave, do remember to email us your queries. We'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.